What's going on, everybody? Jeff here. Welcome back to the channel. All right, second day in a row, the market is absolutely ripping at a time where the bearish sentiment was very high. We had been talking about the amount of money pulled out of the crypto and the stock market that was on the sidelines waiting for the right time to enter. And let me tell you, the market has absolutely ripped over the last 2 days. So in this video, I want to talk about the catalyst behind the move to the upside. And we're also going to talk about that SPY daily W formation that we've been talking about for a few weeks now, as it is set to come to a full circle very shortly. I have a chart I had found I want to go over. It's going to give you a very good visual on my thesis and give everybody a good short and medium term outlook on the markets and what to expect going forward. So let's get right into it. First off, as you can see, all green across the board. We still do have about an hour left to go. I wouldn't be surprised if there is just a slow fade because we are going into a weekend. The tech sector is lagging behind a little bit. Yesterday, the NASDAQ was up over 3%. Now let's take a look at the charts. Now we had been mentioned in a couple of videos ago that everything was based off of headlines. As tensions were rising over with Russia and Ukraine, the market would pull. There was any positive indication, such as troops pulling back, okay, the market was ripping. All right, I will mention this. So while we completely talk about how these events affect the market, I do just want to say everybody over in Russia and Ukraine and involved, okay, in this is in my prayers at nighttime, because there is never a good moment when there is war going on inside this world. Okay, so let's not take let's take a minute and not forget about that. But I do want to talk about this chart that I had mentioned a couple of videos ago. And while it does say by the invasion, there's a reason why this happens. One, anytime there is fear or uncertainty, which the threat of an invasion is obviously going to cause that, it's never about the action taken. It's just about the fact that it's over. They don't have to worry about an invasion if it's going to happen. They know it happens, okay? And it's almost kind of like a buy the rumor, sell the news, type event. And as you can see from history, the market has pushed after that has happened. This is one of the reasons why the market is pushing. The second reason is this, okay? This is the MOEX, which you can compare this to the SPY or QQQ, okay, in the Russian markets. We have what's called a limit down, which occurs at 7 and 10%, okay, drops inside the markets, the United States markets. And what happens is investors, all right, and foreign money, they feel safe investing in the United States markets. Now, while we have plenty of our own issues, all right, a 40% drop in a single day is not going to happen. These flash crashes, okay, that Black Monday that happened, we have, these circuit halts that occur to prevent this from happening. It's another reason why you see the markets ripping. Now, the last thing is this, all right, and I've been talking about this for quite some time. All right, while some of the banks were out there saying that there could be 7 rate hikes within this year or 7 rate hikes by February of next year, I just say, listen, based on my experience with how the Fed reacts, all right, and just understanding the markets a little bit, I didn't see this happening. And they are already saying that 50 basis points now looks like 25 basis points. So while the market was pricing in really between 50 and 75, okay, now to see that it's a quarter point, it just knows that there's money going to be flowing back into it, because this was the biggest thing pulling down the markets, all right, before the issues happening with Russia and Ukraine. It was all about the interest rates happening. So it looks like they're going to have to pull that back a little bit. Now, that is not good for inflation, okay? Now let's take a look at this SPY daily chart, because there's a big correlation I want to give to you. So I had talked about this W formation. You guys all know this by now. And like I said, it came down just a little bit lower, obviously, than this 420, but it is still making that W formation, a little bit of an ugly one, but it is still a W formation that is occurring. Now, do I think that we're going to get right back up to this 457 level? That's a good move for the SPY to make over the next few coming months. But let's take a look at this chart right here, okay? And this is what a lot of people are kind of predicting, which means if a lot of people are predicting it, chances are it's not going to happen, okay? It was the same thing when we saw this. We thought the SPY was just going to blast right through 400 and go down to that 390, 380 area. Just boom, all those puts just got and the bears just completely got ripped to shreds by the bulls. All right, but this is kind of like a W formation that's occurring. Like I said, if anything happens out of that March rate hike, that's where they're seeing this big pull happening. Now, this also correlates back in 2018, and I'm going to zoom out here. We're going to go to the 5-year chart, and you can see here, I'm going to zoom in a little bit for everybody. This is when that same thing happened. It was a W formation followed by that big pullback, which would put us, I believe, somewhere around the 380 area if we're going from the 457 looking like that perfect triple top up here to happen, and then a continuation to the upside. Now, to give you my longer term outlook, I think that we are okay when it comes to the end of the year. However, do I think that this 410 is the bottom? No, I don't think that the move to the upside that has been made since March of 2020 and just the downside we've had from 480 down to 410 is really enough of a breather, and enough of a cool off, when it comes to a price drop to really warrant another leg up. I do think that we will try to test this 447 area, have a little bit of resistance, and maybe get back down to that 395 to 405 area. I don't think that this is absolute bottom. Now, things can change when we start to get up here, if everything that is happening over in Russia and Ukraine, and I will continue to cover that because Germany did state that they were going to cancel some of their SWIFT payment processing, which would really, really affect Russia. I also do think potentially that Ukraine can say, listen, we are going to surrender, all right, just because their forces are just, the masses of their forces are not nearly the size of Russia. That could really change things up a little bit. And if this goes on over the next couple of weeks, which I expect it to, the Fed already might say, listen, we're only going to go a quarter a point. We got to at least make some move because inflation's getting out of hand. Then you can see back up to the levels that I was calling around that 470 area. But to really get that next leg into the 500, 600 area, I do think we are going to need to see a little bit of lower lows. However, like I said, the volatility is still there. The levels are playing out beautifully. If you are looking to still build for a long-term position, the dollar cost averaging, anybody that's been doing it that I mentioned, literally the first of the year is going to be getting some phenomenal deals. I mean, even yesterday, NVIDIA, getting down to almost that $200 level, Upstart at 100. I mean, these stocks are ripping 20%, or 10 to 20% in a day. So it's giving a huge opportunity when you are looking at the longer term. I'm still playing the volatility because it's there. When we go back to a directional and a trend market, I'll get back to the days where you wake up, check your phone, see green, or roll back over and don't have to read the notes. But guys, that's it for this video. I'll see you in the next one.